Welcome back to another episode of In Focus with Haversine Funding, the podcast where we discuss trends, insights, and strategies that drive success within specialty finance. I'm your host, Nolan Reichert. I'm joined by my co-host, Merritt-Parikh.
Hello. Thank you for having me on again.
Thank you for joining us again. Today, we have a very interesting topic. We're going to be diving into the complexities of healthcare finance from someone that knows the space inside and out, Leon Chernyavsky with Alleon Capital Partners, who is a founder and managing partner there. Leon, thank you so much for joining us.
Thank you for having me. Good morning.
Absolutely. Leon brings a very unique perspective as he's been in the space for quite some time, specializing in healthcare finance and all the intricacies and the fun things about the industry. Leon, as we get started, could you kind of tell our viewers and listeners that may not be familiar with Alion a little bit about the group and what you do?
Sure. So we've been around since 2009. We focused on healthcare financing and factoring. We've looked at numerous types of deals, anywhere from nursing homes to skilled nursing homes, assisted living facilities, labs, etc. So we've looked at deals throughout the United States, and we'll continue to do so.
Awesome.
Yeah, well, I was going to ask, first, Alion, the name.
Well,
tell me more.
So there's two of us. Right. So it was founded by me and my partner, Alex Boguslavsky. And at the time when we founded it, the way it started is that we had a transaction that we were working on, and it needed to get funded fairly quickly, and we needed a name for ourselves so we can get the deal done. So we weren't too creative, so we just put our names together. So it's Alex.
That's awesome.
So I actually just found that story out not too long ago, and as soon as it hit me, I was like, "Wow, that makes so much sense." I don't know how I didn't. Don't know how I didn't catch on to it before. So I got to ask you, why healthcare? Like, what made you go into healthcare finance and kind of go down that path?
So it was actually accidental. Both Alex and I came from the fund investment world. We were managing funds that were invested in short-term credit. And after the 07-08 crisis, there were a number of strategies that basically fell apart. And the few strategies I stuck were healthcare related, because it was a non-correlated asset, and litigation finance. And that's kind of how we started. So we started doing litigation finance, as well as workers' compensation and personal injury, medical claim financing. We both have families, people in our family that are in the healthcare space, and we spoke to them about the issues that they're having in terms of billing and collecting, etc. And then before you know it, we started learning more about medical billing and collection, and started putting our finance heads to use in the space.
I forget about, because everything you do is healthcare related, and I know you have some things that are not, but in general, that's what y'all do. That's your core. But I always forget about the litigation piece. So thank you.
Yeah. About 90% of our business is healthcare. The other 10 is esoteric, litigation finance with some real estate. We'll do some funky deals. So as long as we can wrap our heads around the collateral, which, as we say, once you get to know healthcare, you could get to know everything else. That's we'll do the deal.
I have questions specifically about that, but go ahead. I know you have others.
Yeah. So since you've been in the space for quite some time, how have you seen the needs of healthcare providers switch over the years?
The needs, to be honest with you, the needs have been the same. There are always issues with revenue cycle management, which is their billing and collection piece of the business. And as a result, they're always looking to shorten how long it takes them to collect on their outstanding claims. And, a finance partner comes in to smooth out their revenue stream, to allow them to continue operating and invest in marketing, as well as other issues that they may have down the pike. In addition to that, there's always delays in payment, one way or another, whether through commercial or government payers. So the needs have fairly stayed the same, to be honest with you.
Mm-hmm.
And just so others that are watching understand, I mean, it is a form of asset-based lending or factoring, probably more asset-based lending in that sense. But these are businesses that are, I mean, it's very niche, right? It's these companies come in and they have invoices that could take, I don't know how long, 90, 180 days, depending on the healthcare provider, the service. Um, and there's specific things you have to do. So you're saying their needs haven't changed, maybe how you do it, the regulations behind it have changed, that kind of stuff.
Correct. So the needs overall haven't changed. They still need cash to operate their business. They need cash faster. The revenue cycle management of a healthcare provider is something that's constantly evolving, and their claims they get paid for 14 days. Sometimes they get paid as long as 180 days, and it's hard to manage your business from within those parameters. So that's where they come in for financing.
Okay. And then how do you, because there's got to be a lot that changes along that. How do you figure that out? I mean, I know you've been doing it a long time now, so that's probably just the answer, right? You research, you stay on top of everything, but is there, like, how do you figure it all out? Because there's only so many people that do this, and y'all are really good at it. So, like, what do you do? I should stop talking about long questions.
The main thing for us is a lot of data management. So we do have access to their billing system, to their revenue cycle management system. So we have access to their bank statement, look at historical performance. We even go down to the detail of the actual claim to make sure it's billed properly and collected properly, or they do in case of appeals, denials, etc. So that's something that we evaluate from the get-go. I mean, we've been doing this now since 2009, so we're going on 16 plus years. And we've seen a lot. And then we've seen a lot. We've seen a lot between those years, and we've got burnt in those years. So I think you learn from your mistakes. You learn from what things can happen, and we've been there. We've been around the block for quite a bit.
Okay.
So a lot of healthcare providers still rely on traditional banks, but we see increasing popularity with groups like yours, in alternative finance. So how do groups such as Alion kind of fill those gaps where it is favorable or more beneficial compared to a traditional bank lender?
So a traditional bank lender in general, I think in any industry, will look at certain financial parameters, positive EBITDA for X number of years, some kind of a collateral, more hard asset collateral, such as real estate, etc. They're less, they focus less on the actual accounts receivable of a healthcare provider, for instance, in our case, because they just don't have the expertise. And that's where we come in, and we're able to do transactions that traditional banks aren't able to touch because they probably have size limitations, or minimums, for instance, and their advance rates could be certain, maybe much smaller than what we're able to do because of our expertise. So it's always evolving. There's always been a kind of a play between traditional financing sources and alternative financing sources. Some people have blemishes on their personal credit that the bank won't be able to take, or bankruptcies that the bank won't be able to look at. So there's always a need for a non-traditional source, and I think everyone in the industry, not just healthcare, kind of feeds off of that need.
Right. And so outside of the flexibility that you're able to provide, are there any other misconceptions when you're speaking to prospects or clients that they had in their head before talking to you?
I think the biggest misconception is that it's going to be cheap, because they think that, they went to their local bank and the local bank said that we might be able to lend on a certain percentage. Maybe it's a prime plus, 1, 2, or whatever it might be. And then they come to an alternative source expecting the same pricing, and they don't get it because the traditional bank wasn't looking at the underlying asset the right way, or wasn't able to offer them exactly what they needed. So the biggest misconception is pricing, and the second biggest is that usually our client thinks the value of their collateral is more than it really is. So that's always a battle that we have to fight.
Is that because they look at the gross amount, and in healthcare, I mean, that could be a wide range, right, from 10 to whatever percent.
Wide range, yeah, because they look at maybe the entire picture over a full year, and we put a borrowing base of maybe 120 or 50 days. What that is.
But y'all
They
take. Oh, sorry. I was gonna say y'all take the time to dig into the collateral, which is what does differentiate the bank, right? So the bank comes in, a bank might come in and look at it and go, oh, their financial performance is X. They've been around for X. Everything's solid. They're not growing. They don't want too much growth too fast. But if companies are changing ownership, expanding, doing these other things, there might not be bankable. And so there's a cost for that. But then you really take the time to really understand the collateral, what they're doing, so you can customize something that's specific for healthcare and what y'all are trying to do.
correct. That's exactly right. And also in terms of covenants, most banks are going to have to have service coverage ratios, fixed charge coverage ratios, and for us, we're really focused on the collateral, so we're very covenant light. And for that, it's pricier than a more traditional source. But at the end of the day, most of our ABL transactions are, in essence, interest only. So from a cash perspective, it's really not that big.
Hmm. Okay. Gotcha.
So with the industry, kind of changing gears a little bit, you've seen a lot of changes in the industry. There's, a lot of pressure currently, whether that's staffing shortages or regulations. It seems like it's always constantly evolving. How has that changed or affected the demand for, specialty finance in that space specifically?
So it actually increased the demand for it because of the staff shortages. That there's a bigger need for cash because they want to offer more money for, let's say, nurses to be able to come work for them. So they need to be able to generate cash sooner. So that's one thing. Regulatory changes are always happening within the industry, and usually they're for the negative for the provider, right? So they're always going to have some kind of restraints in terms of time to collect or some kind of reimbursement issues. So the need for a financing partner, the way we see it, or when it comes to regulatory changes, usually stays the same. If it also decreases oftentimes.
I have just because of timing. And I know you and I talked about this briefly a week or so ago. There's a new bill that came out that everyone's heard of. But what does that affect on
Big bad beautiful bill?
Yes, that. It's not a political thing. I'm just curious, like what impact does that have, or is there even one yet, or is it to be determined later?
So it's still too early to tell what the end result of the bill will be. We know that there'll be Medicaid cuts down the pike. We don't know how they're going to affect most healthcare providers. We do know that rural hospitals, for instance, may be affected, or other hospitals may be affected a bit more than more traditional mom and pop shops, because if you have cuts in Medicaid, you'll end up having patients that are not on Medicaid, but the hospitals have to see them anyway, so it's uncompensated care potentially. But the government is setting up a fund, the $50 billion fund, that will be used to compensate the hospitals for the loss. So it's still too early to tell. And by talking to some of our clients, they're just in a sit and wait position as well. They don't really know how it truly will affect. Maybe that $50 billion fund will become 100, in which case it wouldn't matter. So at this point, it's really just too early to tell. A lot of it is media putting out a lot of press releases and comments just to get the hype.
Mm-hmm.
So, and even if it's not an immediate impact, it sounds like it's going to be a gradual one to wait and see, and then there's a cushion there, so you have time to react, and the companies that are affected have time to react. Okay.
Correct. So it was one thing we've always learned in healthcare: nothing is so immediate. It always takes time. Even when they change the reimbursement rate, they let them know ahead of time, and then it takes the provider time to adjust and fix things if needed. So we're less worried about the immediate impact, more down
the long term. Okay.
So one kind of keyword or trending word I keep hearing pertaining to healthcare is the value-based care model. Could you break that down a little bit for myself and the viewers and the listeners that might not have an understanding of what that is and what that change brings compared to how they have been historically performing or modeling that out, and then also to stack on another question, how does that change how you do business?
Mm.
So the value-based care model, I mean, the traditional care model is the called a fee-for-service, whereas you have an ailment, you go see your doctor, you get treated for that ailment, and a doctor bills an insurance carrier and it gets paid for it. That's the traditional care. Obviously, we all know there's been a lot of fraud and abuse in the industry, both on the commercial and the government side. And the government decided to create what's called the value-based model, which is essentially a savings model. So they create a budget for a specific demographic, and they bring doctors into their network and say, you have a budget of X to treat X number of patients or Y number of patients. And if you're able to treat those patients within that time and keep them out of hospitals, which are the most expensive, and make sure that their quality of medical health care stays the same, there's potential for you to get a piece of what the government is saving on those patients. So a lot of actuaries and analysis goes into this. And that's the push to get the primary care physicians into these networks, the value-based networks, where it's less of let me bill for everything that I do for the client. It's more let me treat the client as easily and quickly as possible so that I can save on the total budget that was allocated. So with value-based care, it's all about saving on the budget that's presented to the providers. And it's meant to save from the fraud and abuse that's been going on within the industry. So at the core, it could work. It has worked to a certain degree, but it can also go negatively because some of the care that's provided by the providers isn't enough because they're trying to save funds.
Mm-hmm.
Yeah, and I was thinking it was more aligned interest when you said value-based and how you're describing it, but I didn't think about the flip side of that. So yeah.
Right.
Yeah.
Yeah. So does that provide more invoices at a smaller dollar amount for you? Since they're not, the goal is to keep the patient at the primary care physician, opposed to letting issues stack up, and then that's where they have to go to the hospital, where that really starts to eat into the budget. You start to see some of those larger invoices. Would that be right?
So it's different for us because of the value-based care. We're not providing financing on the receivable basis. With value-based care, the only financing potentially that you could provide is on what's called a saving that's generated. And there's some serious formulas and data that go through that gets amended and changed throughout the year, so you have to follow it. So we tend to not like to do those type of things.
But you have, I'm sure, in the past.
We have in the past, and we've structured it where we feel comfortable, but it's not as much as more.
Yeah, because you kind of have to be your own actuary, I'm guessing, to figure out how well they're going to perform based on history, and then based on that, what they would save. But you're really making an advance on something that you haven't confirmed yet. So I get that. That's like a one-off situation. Okay. Okay. We missed some. We didn't miss it. It was more of we talked about regulation. We talked about banks, and somewhere in there, I didn't ask about. A big topic this year has been interest rates. The impact, not just for the companies, but for y'all, like how are these changing interest rates impacting you, your clients and customers? Like, what is that? Well, tell us. I got to stop the questions.
For us, because we're not a traditional source of financing for our clients, our rates have stayed steady across the board. Whereas when the rate environment was very low or traditional banks were lending at virtually zero, we would see a lot more expensive than those traditional sources. Nowadays, we're a lot closer, so it actually has impacted us positively. However, the client, needs to understand if they can afford the cost, and that's a lot of the analysis that we do goes into figuring out if our cost of capital will benefit the client. We never want to do a deal where we feel that the client is or could potentially have issues. So the interest rate environment as a whole has been positive for us as a lender, but for the client, we just have to make sure that they're able to.
Got it. You need to make sure they have the capacity to make the payment at the higher rate. But I'm sure the company has to look at, well, if I don't take this money, I can't get to wherever I'm trying to get to, so it's worth it. So they have to do that analysis as well. Okay. But you haven't overall been impacted necessarily for that today. Okay. All right.
One thing that I love to ask our guests, could you give me like a real life story of a time where, Alion has came in and helped a client that was facing, whether it was financial instability or just like a win that's always stayed close to you that,
A story.
just one of those ones that sticks to you. Could you walk us through, what they were facing and how you were able to come up with a solution for them?
Sure. A while back, a few years ago, we were financing a methadone. And in the particular state that they were in, the state would have budgetary issues around the middle of the year. So for a period of 30 to 45 days, the methadone clinic would not get paid at all. But they need a financing partner, specifically a factoring partner, to be able to factor their receivables during that time so that they would continue to make their rent payment, pay their staff, and be able to buy more inventory. So it was a perfect example of something that was out of their control, because you can't control, the state budgetary issues, how long it will take, and when things will get resolved. But it was happening on a yearly basis. So they knew that around May to July they would have cash flow issues. So during that time, we would provide factoring for them, and that's one of the facilities that stands out for sure.
Mm-hmm. Yeah, I should say I love that. Like, one of our values is, create inspiring stories. So anytime you can come in and be that solution, that financing solution to capital, it kind of makes you feel they don't have to worry, gets rid of the stress. They know you'll be there to support them. So that's great.
Yeah.
Do you see any like reoccurring situations or pitfalls or challenges when you're talking to prospects and your clients that they face that kind of led them towards Alion opposed to, another provider?
Well, as far as pitfalls, I think being a medical provider is tough enough because it requires a lot of regulatory knowledge as well as medical knowledge and the ability to service the communities. When you put finances on top of it, a lot of them tend to struggle. And they struggle not because they're not able to figure it out. They struggle because there's so many other things that they're focusing on. And they always need some kind of a financing partner to help them out. There are very few providers that we talk to that have fantastic balance sheets and income statements. So because of that, I think they become non-bankable for the traditional sources. That's the major pitfall that I see. The second one, and I think I touched up on it earlier, is that the value of their receivables is usually nowhere near what they think it is, because either their billing company isn't providing them the right reports or they're comparing apples to oranges. They only care about how much money is coming in on a monthly basis because they care so much about making sure that their staff is paid and the lights are kept on and inventory is being purchased. So those are the two major pitfalls that I would say.
Okay.
Yeah. Are there any trends that you're currently seeing or have been seeing, in the space over the past, call it 6 months, year till now, that you think will continue throughout the end of the year?
I think AI across the board is helping out, and it started with the government using AI for scrubbing of the claims and making sure that they're figuring out if there's fraud and abuse in the system. I think a lot of that has been moved over also to the commercial world, where they're using AI to make sure they process claims faster. There's a lot more data out there. I see that trend continuing, making it a little bit easier for us to do our job, but it's also going to be making it a little bit harder for the providers because a lot of things will be picked up much easier than they were in the past.
Okay. I am. You always ask another question too. Like, I know we have to go, but what is like advice, something that you want, like if someone were to ask you, what have you learned? What would you do differently? Whatever it is, or what are your words to live by? You pick somewhere in that random question.
Oh,
What is it?
you and I have talked about it numerous times. We lend to companies, but we get paid by people. So it's very important who you're dealing with. So one advice that I have for anyone who's trying to enter the space or anything like that, sit down on the table with whoever is the leader of the company, sit face to face and get a feel for it. Because at the end of the day, when things start to happen, it's not the company they'll pay you back, it's the person.
Agreed.
I like that. Yeah. Well,
all right.
Leon,
Thank you.
yeah, I really appreciate you joining us and kind of breaking down, the healthcare space and the challenges and successes that you've got to enjoy as being a lender. If, for some of our viewers and listeners that wanted to get a hold of you, what would be the best way where they can reach you?
They could email me, leonc@allioncapital.com. You can call me, 201-340-6344. You can go on our website, allioncapital.com, and get more information on it.
All right.
Awesome.
Well, once again, thank you so much for joining us. It was a pleasure. Jen, thank you
Yeah.
for being co-hosts on this episode. And to all of our viewers and listeners, thank you again for joining us on another episode of In Focus with Haversine Funding. Remember to stay informed, stay inspired, and stay on course to growing your financial platform. Till next time.